Hey guys, welcome back. Hope you had a good Thursday, May 26th. Wow. GME continued its rally. It's coming early. Sub up, like up, comment down. Happy money sticks around. Spies up 2%. And we have a Twitter you can follow us on at Happy Money YT, as well as our Discord server. Link for that's in the description. Just past 400 followers on here. Thanks guys, appreciate it. Discord server, I think we've got like 600. It's free to join. Welcome to join there. Well, today continued to rip, and today looks more like covering going on and rolling over. Happening a bit early. Speculation from me would be that since earnings is earlier and it's next Wednesday, they're trying to roll their position before earnings so they can short it into earnings. But we'll see. Or it's them rolling because they are anticipating some sort of dividend outside the stock split or some sort of catalyst that's going to force them to close. I don't know how that would correlate with them rolling now. Why would they do it now? But I don't know. Something with this earnings, I think, coming up is causing them to roll over sooner, because this is early for sure. Yesterday, I think it all started with the SLD period, which Don was saying he's noticed 10 to 20% during SLD periods, typically just a pump, 1 or 2 days, and it's come back down. And we saw that yesterday, but it just became larger and larger. And I think the SLD just kind of started, and then it just covering started happening. Even though yesterday was much more organic, I would say, and more SLD-like price action with good volume, but not like today. Today looked much more like covering, much steeper price action, much more volume. But still in this SLD period, because the shorting was very natural. This is unlike GME when there's not SLD going on, where it rallies and then consolidates and doesn't just get rug pulled and then rips up. And so Friday, it's out of the SLD period, I believe. So that will be kind of the test, I guess, of how the price action works. It appears that they're recovering, so this will, if they are, then this will probably be at least a 3 to 4 day rally. On the hourly here, we've got a nice bull flag setting up. RSI's even come down. It's not even overbought anymore. Yeah, volume's good. A lot of volume today. We're at 13.7 million today. Looks very similar to this rally up right here. So today could be this day. But again, this is early, so I wasn't anticipating that they would be able to have that much flexibility with their rollover period, the window that they could roll over in. I don't know a whole lot about it, but I don't think we've seen them stretch the time frame this much. If that's what this is, maybe this is something else. It did look like SLD price action yesterday, and today did too, mixed with covering. So might see repeat of this. I went long on calls for next Friday, because tomorrow it could consolidate or it could keep ripping. If we get to the 200 price target that I'm hoping for, then tomorrow I'll probably have to rip, and then Monday market's closed, Tuesday might have to rip, and then Wednesday, I don't know, I'm expecting them to short it maybe after Wednesday, because I think it's after hours, the earnings. So maybe Wednesday, Tuesday, Wednesday. We'll see. I got exposure for next Friday. To put it basically, or in basic terms, we've got green over the 9. We've got bullish MACD on the daily. This is all daily. And we have volume. These are the indicators I look for a pinch to happen. Add it back here. I've had it pretty much every time. There's only been a couple fake outs. Here was a bit of a fake out, just building that trough. And then not as much of a fake out here, really, just because of the lack of volume and didn't have big green candles open and close. I don't think it's a 2-day rally, but this could just be a 2-day rally. The only 2-day rallies we've had would be one back here that are significant. These are smaller though, and on a lot less volume. This was 3-day, so maybe one more day. This was a 1-day, but consolidated to a higher peak. And then I was kind of expecting this move right here to be at the end of June, end of next month, which might still happen, but it's stuff's all moved around right now, because we're also getting this bear market rally right now. And if you watch my other videos, I was saying I'm not quite sure how the timing is going to work, because oftentimes bear market rallies would probably be when we have this rollover or even the short squeeze. That's when That's when Volkswagen squeezed in the 2008 crash, was in a bear market rally at kind of the bottom of the market crash. So I think SPY, bring that back to SPY. I think SPY will probably keep rallying. We've got bullish MACD, green over the 9. We've been calling this out for the last few days. We saw the divergence here on the 4 hour as well as the daily with this RSI and MACD divergence looking like it was going to pull up, and finally got it today. I was a day early on my play, but it still worked. We've got credit spreads. I think SPY will probably keep rallying up until, I'd probably say 415. If it breaks that, probably that 420. If it breaks that, I mean, 424, 425. After that, 436. So yeah, we'll just see how big this bear rally goes. If it's another repeat like this. We don't have another catalyst, I think, like FOMC, Powell type stuff for at least a week, but tomorrow or next week is a short week, so I don't think we'll have a rip like this. Well, but we might though, because this is a bear market rally right here too. So we'll see where the resistances come in and where it starts to slow down. We have that Tesla long plays, anticipating this bear market rally again that I think we are starting. We got them because this divergence also not quite as clean as the SPY, but I got it on Tesla because Tesla is known to rip. We also pointed out in yesterday's video this inverse head and shoulders it formed on the hourly head, shoulder, shoulder, and here it's building the rest of the body inverse. So breaking this 408 will be big. If we don't break the 408, then kind of consolidate, then I think we're back in the bear market, but I think we will. I think we'll keep going on the market. And I mean, GME, yesterday my sentiment was different. I'm like, wow, it's just a big SLD period day. Today, that changed once we broke new highs. I figured with yesterday, if it was just SLD, then today it would be shorted down. If we kept rallying like we did today, then they moved it up to a shorter time frame. Or they're rolling over rather. So I'm not sure if they have enough time to do all the rolling over before earnings. Let's see, that'd be 1 trading day, 2 trading days, 3. I think they have Wednesday, because I think it's after hours on Wednesday. So that'd be 3 trading days. That would be a total of 5. So here's 5. They can do it. I mean, if all they have to do is get it to about 200, if that's about where their rollover would be done, then that would be it. But I mean, even on this rollover, they had a couple days down here. So it's possible we kind of rally through earnings, and then it gets dumped back down on maybe the shareholder meeting the next day, which is Thursday. But yeah, we're riding it out. I don't think this is a short squeeze yet. Maybe this is the beginning of it. I think catalyst from shareholder meeting and earnings could trigger the short squeeze. But yeah, I'm waiting for resistance, alts, and stuff like this to happen again, and reducing exposure to the upside and getting exposure to the downside. It's been easier to make money on the downside with GME than up, just because this is much more predictable than these crazy volatility events. However, you can make more quicker, of course, with this than with this. So I will show you the option plays we're doing. I did some trickery stuff. I'm going to be rolling covered calls, which I am content with. That is the risk you play, having covered calls. I'll just show you today. I rolled over some that were in the money that expire tomorrow. I typically like to push them all the way to expiration date, but since they're in the money, it's possible someone would exercise them, and then I'd not have the shares in the morning. And I'm trying to marinate these shares for a year, so I get long-term cap gains on it, potentially. So I did roll some of them. I rolled a 89 strike up to 95 for next week. Received a premium, a credit for that, and then rolled 103 up to 108 to next week and received a credit for that. So not taking any losses, just increasing the strike and increasing the time and taking a little credit. So I basically increased it the most amount of money I could, or basically, yeah, the highest strike I could, and still receiving a credit. So the play is still profitable. And if nothing else, I can always just lose the shares of those strikes and I'm still up on it because my cost basis is less than 108 or even 95, I think, on those. So that's the way that play works. It basically just smooths out this whole graph. If you're doing covered calls, this whole graph, it just smooths it out more or less, because your covered calls reduce your upside, but then they also reduce your downside and just smooth it out. That's on the long term. Those are margin shares, so we'll see. we'll see. I'm not sure if I'll be able to hold those as long. And then on our kind of our theta farming account, I have a short 89 put, which I'll be closing and rolling up to probably a 35 delta put for next Friday. Just safe money. It'll be a lot higher strike though, probably like 110 or so. So that'll take more capital, which is kind of the sucky thing, but it's nice premium weekly. This is 334. Here's a covered call I have on here. I rolled this to next week from 98, I think, to 104. So we'll see. Have to probably keep rolling those further like I did last time. And thankfully I got out of some of the covered calls on here, so I have 600 just shares sitting on here, which is nice. Did a lot of trading today. Yeah. I'll go over the GME stuff on the positions, but real quick, UONE usually runs on Juneteenth, so I got UONE call debit spreads. You look, here's Juneteenth right here. 610 it ran, was the peak. Peak then was 618. So it's setting up. I'm expecting it to run and have a peak around then. We'll see what the peak is, whether it's 24 or not. The positions I got, let's see what I get. 12.5 and a 22.5 call debit spread. So max gain's 3,500 on it, and max loss is 47. That's what I paid to get into the play. That Yaz is a little loud there. So yeah, hopefully that one works out. And then I guess everything else is GME. I can just show you guys on here the GME stuff I did. Tesla's rallying today, as I showed you, so that's nice. This call's up 135% today, but I'm only up 1% on it. Open. Opened up this one for in case GME does have this rally the next 3 or 4 trading days, and it hits that 200 peak. Could go higher for sure. It could be the beginning of the short squeeze. 28 grand max gain on this. That's if it's at 200 at expiration, which I'm not necessarily expecting that, so I'll probably just close this if there's a top. 1700 in that play. And then let's see what we got here. 120, 130. Okay, yeah, so this is kind of this tricky play. I bought these 120 calls 2 weeks ago, and GME was not 2 weeks ago, sorry, like a week ago. It's down here, right here, or right here, somewhere in here. I got them for June. They're the June calls. June 120 calls. They were out of the money at the time. These ripped up a lot. And yesterday, I was too confident that we're only going to get a 10% move because of SLD. And so at 10%, which was about 100, I didn't think we were going to break the 100. I had these 120 calls. I'm like, I'm going to short some calls on those. To short a call on your long call, so to go short on a long, you have to have a higher strike. So I shorted the 121 calls. On my 120 long calls, I shorted 121s, then I had a debit spread. And then you know what happened after that? After it hit 100, it rallied all the way up to whatever, 115 yesterday. I'm like, all right, whatever, I'll just hold it. And then, the 121 strike I shorted was for this expiration, so it turned into kind of a calendar spread also. Poor man's covered call. And then today, of course, we ripped up to 148, and I timed it pretty good near the top. I decided to roll it again. So I had a 120, 121 call debit, calendar spread, and I rolled just the short leg, the 121 call. I rolled it from 121 to 130 for next week. So what that did is that gave me 8 grand in premium to open these 4 short 130 calls, but to close my 121 calls, it costs like 4 grand. So basically my net gain on this, if this expires worthless, is 4 grand. And my cost basis to get into this 120 calls was also 4 grand. So if GME's below 130 by end of next Friday, I will have paid for my 120 calls for June. That said, if it's above 130 by next Friday, I'll keep rolling this up. And that's fine. I can keep rolling this up until expiration on the other one, till June. Max profit on it at this point is 28,000. That's because of the spread between the strikes. So just going to keep rolling up these long calls, or these short calls on my 120 long call. That's that play. And then this is the 180, 200 call debit spread for next Friday, which I might close tomorrow depending, or I might wait till Tuesday or Wednesday. And then here's this 155, 185 I opened up earlier. I still have it. This is for July monthlies. And then today I opened up 490, 500 call debit spreads. These are basically squeeze plays. 120k max gain on these, cost $826. If GME is above 500 by middle of July. So yeah, we'll see on this one. Basically, I want protection to the big upside. When it rips, I keep selling off stuff. I'm like, I need more longer term protection if we are just going to squeeze. This 150k or whatever, 120k will be nothing if GME is that high. That will be a small position compared to everything else going on. But it's nice to have it there, just in the back of your head. You've got some exposure to the upside. Oh, that was a lot. Thanks guys for watching. Hopefully you're able to profit some. Yeah, my cover calls, I'll just be rolling, which is fine. Rolling. I'm content having covered calls through the squeeze. If you're serious about your diamond hands and saying you're going to hold, not going to sell, you should be selling covered calls. If you're real about it, because those are the people that are really holding. Because I'm not selling shares if I have covered calls on it. I'm fully expecting to have selling covered calls into the thousands on some shares, which will be fun. See you on Discord, guys. Peace out.